Today on Technically Speaking with Jim Wyckoff, we're going to be taking a look at gold's upswing this week. Stay tuned. And joining me now is Jim Wyckoff. Jim, thanks for being with me today.
Hello, Alex. Always nice to be with you.
All right, Jim. Last week when we spoke, we mentioned that there would be a flood of data coming out this week. That started with jobs numbers, and gold reacted very positively to that. What more could we expect in terms of gold's reaction to more data coming out?
Well, Alex, you saw the U.S. jobs report on Tuesday morning give a bullish tilt to the precious metals markets due to the notion that any ideas of tapering of U.S. monetary policy are probably pushed back to at least the second quarter of next year. That means the Federal Reserve is going to print more money, and that is a bullish factor for many asset classes. But what you've seen most of this week is technical momentum. We saw December COMEX gold on Thursday hit a 4-week high. The bulls have gained technical momentum to suggest that prices continue to work higher here in the near term. Now, what will be important is if prices on Friday close at a bullish weekly high close. That would give the bulls even better upside momentum to really give them a good push going into next week.
Now, I see a lot of reports and analysts talking about China, the downturn in China. What kind of effect can this have on gold prices in the coming months?
So what we're seeing out of China, Alex, is a mixed bag of economic data. Just Thursday morning, we saw a PMI manufacturing figure that was a bit better than expectations. However, that was mitigated by rising short-term interest rates in China just recently that has caused worries about inflationary price pressures, could even cause the People's Bank of China to begin to rein in monetary policy or tighten monetary policy here in the near term. What that would do is potentially crimp demand for raw commodities from China, which is the second largest economy in the world and a voracious consumer of the raw commodities.
We're seeing a lot of physical demand being spoken about right now in the news. It's a focal point for a lot of analysts, for a lot of investors. What do you see on that front?
Well, Alex, I read the same reports you do coming out of Asia, and that is that the holiday seasons upcoming are going to prompt some better physical demand for gold, and those are the reports I'm reading, and that is a bullish underlying factor for the gold market.
Now, is there anything we should keep our ears to the ground to in terms of moving gold prices in the positive or the negative in the coming months?
Well, Alex, I pointed this out last week in my roundup report that one thing that concerns me is the European Union and its financial problems that are still present. They've kind of been swept under the rug by overshadowing events in the U.S. and maybe some other parts of the world. But just this week, it was announced that the European Central Bank is going to start doing stress tests on its major financial institutions starting in November. If we see a major institution in the European Union fail or fare poorly on these stress tests administered by the ECB, that's going to undermine confidence in the European Union as a whole, and that could be a significantly bullish factor for the gold market. Reports have come out the past several months that European banks have very poorly performing loans on the books, and it's not going to surprise me if we do see some of these stress tests performed by the ECB come up with some bad results to spook the marketplace. So that's something to keep an eye out for in the coming weeks or few months, and it's also a potentially bullish underlying factor for the safe haven gold market.
Definitely, stress tests are going to be a focal point for people to look out for. Let's wrap this up with your Wyckoff market ratings for gold and silver this week.
Alex, this week I'm giving both December COMEX gold and silver futures a Wyckoff market rating of 5. That's up from last week, and the trend in my ratings is going up. 5 is a neutral rating, meaning the bulls and the bears are still on a level near-term technical playing field, but the bulls do have a bit of momentum on their side They just have more work to do here in the near term to suggest that prices can trend sideways to higher. Once again, if we see bullish weekly high closes on Friday in December gold and silver futures, that's going to probably raise my Wyckoff market rating into the bullish camp and suggest those markets can continue to trend sideways to higher in the near term. So Friday is going to be an extra important day technically for gold and silver. Now for technical support for December gold, I see at 1300. We've got overhead resistance at 1353.80. That mark was nearly hit Thursday, maybe taken out on Friday if we see follow-through buying. For silver, Alex, I see solid technical support at the $21 level. We've got solid overhead resistance at 23.44.5.
Sounds good, Jim. Great insights as usual. Thank you very much for talking to me today.
Always nice to talk with you, Alex. Can't wait till next time.
And thank you for watching this edition of Technically Speaking with Jim Wyckoff. If you have any comments or questions, please don't hesitate to send them to newsfeedback@kitco.com. Also, Daniela is at the Silver Summit in Spokane right now. If you've missed her report that she put out this afternoon, I strongly suggest you go to kitco.com and check it out. Have a good one.